Hello and welcome to India Business Hour. I'm Parikshit Luthra. Here are the headlines we are tracking this evening. Reliance Industries reports a steady third quarter. Retail business revenue hits a record high. Jio reports a 2% rise in average revenue per user. Oil and gas business reports record high margins of 86%. FMCG major HUL misses estimates in Q3 on most parameters. Profit growth and margin expansion is stagnant. Revenue declines compared to last year. Volume growth is at 2%. Sensex and Nifty snap a 3-day losing streak but end the week with cuts of 1%. This is the biggest weekly decline in 3 months. Nifty Bank records the biggest weekly drop in a year.
If you're an investor, which means you want to hold for a reasonable period of time, then really speaking, why are you wanting to take this risk of ऊपर भी जा सकता है, नीचे भी जा सकता है? Wait until the price stabilizes.
Don't rush into IPOs. Wait for prices to stabilize, says SEBI chief Madhapuri Butch to retail investors. That SEBI is probing 3 IPOs for possible malpractices like inflating subscription numbers without naming the companies. Governor Shaktikanta Das hits back at IMF's claim that RBI excessively intervened in the forex market. Says emerging markets need a safety buffer against dollar volatility, as that RBI intervention in currency markets has always been only to prevent excessive volatility. Union Minister Ashwini Vahanvati backs the mobile industry's demand for tariff cuts on important components, calls it the next logical step. Also says that Vodafone Idea certainly needs capital in some form to keep it running. Adds that the telco is making sincere efforts to get investors. Less than 2 weeks to go to the interim budget. Sources say government could moderate the pace of Capex to help it stay on the fiscal glide path. Capex allocation for defence, telecom, housing and shipping could be higher compared to the last budget. Tata Steel announces its restructuring plan for its Port Talbot plant in UK. Says 2,800 jobs will be impacted as blast furnaces will shut down in a bid to reduce emissions. Workers' union oppose the move, calling it industrial vandalism. Foreign ministers of Iran and Pakistan hold talks over the phone after both nations traded blows. Both ministers sought de-escalation and expressed readiness to cooperate on all issues. Israel Prime Minister tells the US administration that he rejects any move to create a Palestine state once Israel ends its military operation in Gaza. The White House response says it would continue working towards a two-state solution. Communication blockade in Gaza enters the 7th day. India launches the Alliance for Global Good, Gender Equity and Equality at Davos, led by Union Minister Smriti Irani. Garners support from over 1,000 industry partners. Preparations in Ayodhya are in full swing ahead the consecration ceremony on 22nd January. Ram Temple authorities unveil the idol. Several states declare a public holiday or half day on Monday. Let's start with the market. Sensex and Nifty managed to snap a 3-day losing streak, but the rebound on Friday was not enough to wipe out the losses this week. Sensex gained nearly 500 points. Nifty gained over 150 points today. But for the week, both indices are down 1% each. Nifty Bank continues to struggle largely due to the sell-off in HDFC Bank. In fact, Nifty Bank Index posted the biggest weekly loss in a year. Moving on, Reliance Industries has reported a steady third quarter. The consumer-facing businesses like Jio and retail had a stellar quarter. Oil and gas business reported record high margins. Let's now go across to our team of research analysts for more, starting with Sonia Shenoy. Sonia, over to you.
Well, thanks a lot for that. As you said, it was a steady quarter across most businesses. So that's a big plus point for Reliance Industries this time. The only thing is that in the oil to chemicals business, there was a planned maintenance shutdown which impacted their earnings. But stripped of that, the consumer-facing businesses have done very well this time around, both Reliance Jio as well as Reliance Retail. Now, the oil and gas business also posted its highest ever quarterly EBITDA this time. And KG D6 is now contributing 30% of India's gas production. More on that later. But But the Jio business has been steady, a revenue growth of 2.5%, and the retail business also was on a very strong footing. Consolidated numbers, revenues coming in at 2.25 lakh crores versus 2.32 lakh crores. The margins have improved this time to 18.1% versus 17.7%, and the net profits have been stable compared to what we saw last quarter at 17,265 crores. But as I said, the consumer-facing businesses have done well. So let's take it straight to Rima to talk about how Reliance Jio has done this quarter around. Rima.
Has reported an extremely steady quarter this time, bang in line with consensus expectations. The company's top-line revenue growth has come in at 2.5% quarter-on-quarter, 10.3% on a year-on-year basis at 25,370. EBITDA margins have been stable for the company for the last 5 quarters, and this quarter it's come in at 52.3. The key driver for the company's top-line growth has been subscriber addition, and subscriber addition this quarter too has been extremely strong at 11.2 million subscribers, the highest that we've seen in the last 10 quarters. And subscriber addition for Reliance Jio has also been ahead of peers. As I said, margins for the company extremely stable at 52.3%, and that's driving about a 3% increase in the company's profitability and 12.3% on a year-on-year basis. So very steady showing from Reliance Jio this time, and very strong subscriber addition continues. What's enabling this subscriber addition has been the company's 5G rollout and the kind of penetration they have on 5G. So they are onboarding, or they managed to convert a lot of the subscribers into 5G, and 5G has been driving growth for Reliance Jio.
All right, 5G has been driving growth for Reliance Jio, but Reliance Retail is a juggernaut that continues to roll on itself. Record revenue and EBITDA results beat estimates on all parameters. You're looking at a 22.8% jump in Reliance Retail's revenues year-on-year, crossing that 83,000 crore mark for the quarter. That's $10 billion in quarterly revenue. And even, the EBITDA has jumped by 31%. The benefits of operating leverage finally showing. 6,300 crore thereabout is the EBITDA that Reliance Retail reported in the third quarter itself. That implies a margin expansion of nearly 50 basis points year-on-year. And quarter-on-quarter, the margins have maintained at 7.6% itself. Other important internals, footfalls have crossed 28.2 crore across all formats. Total store count at the end of the quarter was close to 18,800 stores, with 72.9 million square feet retail area, them having added 252 stores in the third quarter itself. Grocery delivered a 41% growth. Consumer brands, 3 times growth. Fashion and lifestyle, almost a 28% jump. And we've seen consumer electronics business deliver 19% growth as well. So all of this is a stellar performance from Reliance's retail vertical, which of course at last valuation was close to $100 billion. Perhaps there is a case for an upward reset for Reliance Retail. But for oil to chemicals and the oil and gas business, Sonia, tell us.
Okay, so let me start by saying that oil and gas business this time around was record high quarterly revenues and EBITDA by the company. For oil to chemicals business, it was a maintenance shutdown that impacted the business on a quarter-on-quarter basis. But if you look at the numbers on a YY basis, it is a good performance. So their revenues came in at 1.41 lakh crore rupees, which is a flattish performance. Their EBITDA at 14,064 crore rupees is a decline on a quarter-on-quarter basis, but it is up on a YY basis, leading to EBITDA margins of 10%, which is a 100 basis points decline on a quarter-on-quarter basis, but it is higher by 40 basis points on a YY basis. As I said earlier, it's the planned maintenance shutdown which has impacted yields and profitability. The company says numbers would have been better both on a quarter-on-quarter and on a YY basis if this shutdown hadn't happened. But this is something which happens every 7 to 8 years, which is very normal. And this is something which will reverse, of course, going forward. So nothing to worry about here. Now, let's talk about the oil and gas business, where it was a record high quarterly EBITDA by the company. They did revenues of 6,719 crore rupees, which is an increase both on a quarter-on-quarter and on a YY basis. EBITDA, the number is 5,800 crore rupees, which is a huge number going by the history that we've seen in the oil and gas business. Their EBITDA margins at 86% compare with 70% on a quarter-on-quarter basis. So looking really good. They are doing production of around 30 MMSCMD. And just to give you some perspective, India produces half of the gas that we consume, which is around 160 to 170 MMSCMD, out of which 30 MMSCMD will come in from Reliance Industries. So they will be contributing big time when it comes to gas production as well. So strong numbers here, and barring the one-off that we saw in auto chemicals business, it was a steady performance from both the businesses.
And staying with earnings, Hindustan Unilever has reported a weak third quarter, missing street estimates across all parameters. Net profit and revenue were flat, while margins expanded slightly on an annual basis. The company's volumes grew 2%, which was largely in line with CNBC TV18 poll.
So we do expect over a period of time this will lap. But as we speak, food and refreshment is where we do see the volume drag, although the heartening fact is that we remain very competitive on value share across all our big categories in food and refreshment. So that is something that gives me quite a lot of confidence that what we're doing fundamentally are absolutely the right things. We are investing behind our brands. Our brand power is strong. Advertising, which had come down over the last several years of high inflation, is back. We are at very competitive levels of investment. Brands have good product quality. And I feel that our distribution and operational grip is tight. So we are going to come out stronger from this inflation-deflation cycle.
All right, from HUL, let's move on to Ultratex. The numbers for the third quarter were largely in line with street expectations. The company's net profit rose 67%, while revenue jumped nearly 8% on an annual basis. Margins expanded significantly on the back of lower power and fuel costs. The company's debt was on the higher side, largely due to rise in capital expenditure. SEBI chairperson Madhabi Puri Butch cautioned retail investors against the IPO frenzy. Very important statements there. Speaking at an event in Mumbai, she also said that 3 IPOs are under investigation for possible malpractices, including alleged inflation of subscription on numbers, admitting that IPO market is more a market of traders than investors and the price discovery mechanism is imperfect. The SEBI chief urged investors to wait for the first quarterly earnings report of a newly listed company before investing in it. She also said that the regulator is looking into mule accounts and the practice of putting in faulty IPO applications to possibly inflate subscription data. She did not mention if the issues under probe are main board IPOs or SME IPOs, but she did say there are certain merchant bankers whose names are cropping up often in these cases.
The price discovery mechanism of IPOs is imperfect. And therefore, if a retail investor, not a trader, not the one who wants to flip on day 1 or day 7, because then you're a trader, you're taking the risk, you know the odds, upar bhi ja sakta hai, niche bhi ja sakta hai. If you're an investor, which means you want to hold for a reasonable period of time, then really speaking, why are you wanting to take this risk of upar bhi ja sakta hai, niche bhi ja sakta hai? Wait until the price stabilizes. Possibly wait until the first set of quarterly results come. There is no hurry and there is no impact cost for a retail investor. Now, institutions, if they want to wait and buy in the secondary market, there'll be huge impact cost. So I can understand an institutional investor wanting to come into an IPO, and they also have the wherewithal to independently assess the value. But for a retail investor, if you want to play the odds, come into the IPO market. Then if you win, good. If you lose, it's part of your gamble. But if you are an investor who believes in that company for the long term, then wait until price discovery is more efficient. You apply in a manner that your application gets rejected. So you put in hundreds and hundreds of crores of applications with multiple pans, knowing full well that they will get rejected. So the whole purpose of applying is to inflate the number, knowing full well that it will get rejected. Right? So these are the kind of practices which we are observing, because we now have the data to be able to see such practices. And we are also seeing, I would say, that there is some pattern of which kind of merchant bankers tend to be, let us say, more frequent names occurring in such kind of malpractices. And therefore, we will be, in the interest of the investors, we will be required to both review policy as well as enforcement action on such areas.
All right, important messages there from Madhabi Puri Butch, the SEBI chief. Moving on, RBI Governor Shaktikanta Das has urged the International Monetary Fund to consider the challenges faced by emerging economies before criticizing their forex intervention. Speaking to Shireen Bhan in Davos, the governor said the emerging economies need to protect their currencies against dollar volatility and build their own buffers. He added that RBI's intervention so far has only been to check the currency volatility.
Your comment saying that institutions like the IMF, etc., need to take a much more balanced, nuanced view of emerging markets like India, and you said this in the context of currency management and the IMF's change as far as classification is concerned. What is it that you believe they're failing to perhaps recognize or understand, the nuancing that they're failing to recognize or understand?
I think it should be recognized that an emerging market, it's not an India problem. It's an emerging market issue. They should keep in mind the fact that emerging markets have to ultimately protect their own economies. The dollar index at one stage went up to about 114, then it came down to about 101, now it's holding around 103, and all this has happened in the last 2 years. So see the volatility there. Now, if that volatility translates and causes equal amount of volatility in the emerging market currencies, where will they go? What is the safety net that emerging market economies have? So emerging market economies have to sort of build up their own strength and build up their own buffers. In Reserve Bank, as a part of our active, we have, as a part of our explicit policy, we have embarked on strengthening and building up higher reserves. Our reserves are around $620 billion, at the moment. So individual emerging market economies have to insulate and protect their economies from the spillovers of the global currency movements and the fluctuations. They have to ensure stability of their currencies. And by stability, what I mean is that undue volatility has to be, prevented. The Reserve Bank's intervention in the currency market is only to prevent excessive volatility. This has been the stated policy of RBI for so many years, and I would like to reiterate that that continues to be the policy of RBI. With a forex buffer, the investors have greater confidence on India's ability to service its external obligations. With all these confluence of factors, naturally the rupee has remained stable. You have to recognize as the ground reality. You cannot just pick up 11 months and say that rupee has remained stable. You look at the 2-year horizon. After the Ukraine war in 2022, the rupee depreciated by about 10%. Now, so if you look at a 2-year horizon, the rupee depreciation is about 4 to 5%. And historically, if you see, even over last 5 years or 10 years, historically, if you see, the annual average depreciation of the rupee has been about 4.5%. Even now, the annual depreciation is 4.5%. So I think, we have said it in our reply, which is already published as a part of the RBI, our response to the IMF report. So what we are doing is that we would like to say and impress upon the IMF, or for that matter any agency, to look at these ground realities and realize and appreciate the challenges which emerging market economies on the whole they face, and their priority is to protect their domestic economies. You cannot take away that right from these countries.
All right, that was the RBI Governor's message to the IMF. Coming up on India Business Hour, Union Minister Ashwini Vahanvati backs the mobile industry's demand for tariff cuts on imported components. And you can also catch all CNBC TV 18's news and updates on Facebook, X, Threads, Instagram and JioCinema. You're watching India Business Hour. Tata Steel will shut down its 2 blast furnaces at its Port Talbot steel works in the UK in phases this year. That's right, the company has said that it will commence statutory consultations as part of its plan to align the loss-making plant with its green goals. The move will impact 2,800 jobs and has been opposed by workers' union who call it industrial vandalism. On to a CNBC TV 18 exclusive now. Telecom, IT, Rail Minister Ashwini Vahanvati has backed the mobile industry's demand for tariff cuts on imported components. Speaking to CNBC TV 18 on the sidelines of the World Economic Forum in Davos, the minister said that a duty cut is the next logical step. He also said that cash-strapped Vodafone Idea is trying its best to raise funds, but did not divulge more details.
I want to go back to telecom and address the Vodafone issue with you, because when we last spoke, you were hopeful that they would have been able to get investors on board. That hasn't been the case. The government continues to be the largest shareholder in Vodafone. Is that something that you are looking at today?
I think they are making their sincere efforts, and they've been regularly updating us about what they are doing. And I think we have done whatever we were supposed to do. And I think the journey so far has been okay. Of course, it's a listed company, so it's not proper for me to divulge any details or give any comments on that. But yes, they have been making sincere efforts. It's good logical next step, because what has happened is we have to now move from import substitution to export-led growth. That is the moment we need to, that is the transition we need to make. And that requires a totally different mindset, that requires totally different structure.
So there is a case to be made for a cut in tariffs, and you are in favor of that?
Absolutely, especially for the component ecosystem. See, the progress in railway expansion and modernization is huge. For example, last year we added 5,200 kilometers of new tracks. This year we are doing at a pace of 15 kilometers a year. So 15 kilometers a day. 15 kilometers a day is like huge. We have just, out of the $29 billion Capex that we have planned for this year, 2,40,000 crore, we have already accomplished 77%.
Less than 2 weeks to the interim budget, sources have told CNBC TV18 that the government could moderate the pace of Capex in a bid to help it stay on the fiscal glide path. Sapna Das joins us with all these important details. Sapna, what are your sources in the Finance Ministry telling you?
Well, there appear to be indications that going forward, there could be some moderation in terms of the government's Capex allocations in the budgets, be it the interim budget or maybe at the time of the July budget. If you look at railways and road transport, the two big ministries which occupy 50% of the Capex target of 10 lakh crore in this financial year, there appears to be a slowdown in the pace of the capital spend. So that's one indicator to watch out for. Of course, there are other ministries like shipping, housing, telecom, defense. They are doing very well in terms of the capital expenditure. So maybe it's going to be a balancing act where the government actually reassesses its Capex outlays in the coming budgets. That's one. Second, also another indicator, the entire 30,000 crores kept aside as capital investment for OMCs in the current financial year. That's very unlikely to be utilized completely. Third, last but not the least, in terms of states also, out of the Capex loans worth 1.30 lakh odd crore which have been earmarked for them in the current financial year, they have availed less than 50% of that. 61,000 crores is what appears to be the centre's release so far as of December. So these are indications that going forward there could be a moderation in the Capex outlays by the government. Also, let's keep in mind they have a fiscal glide path to meet 4.5% FD target by FY26. That's a tall order that we are talking about. So we have to wait and watch and see how that Capex story actually pans out in the coming budgets.
India forges ahead with its women empowerment agenda on the sidelines of the World Economic Forum in Davos. India announces an alliance for global good, gender equity and equality. The alliance, which will be supported by the Bill and Melinda Gates Foundation, will take forward the commitment of the G20 leaders. The key focus areas will be good health and well-being, quality education, gender equality and empowerment. The alliance has also garnered support from global corporate houses like MasterCard, Uber and Microsoft, and domestic industry leaders like Tata, TVS, Godrej, Serum Institute of India, as well as the Confederation of Indian Industry.
An India that is propelled towards a greater future, will leave no one behind, is what this alliance that is dedicated to global good and particularly focuses on gender, health, education and enterprise resolutely says, in the footsteps of the Prime Minister, that when we grow, that growth is incomplete till every citizen is taken on that path of success. So to all those industry partners who said they will help only when India called and gave so in terms of their support in writing, our gratitude, because that one phone call and your yes is an indication of your belief in India. That today India will lead not only in the growth story, but in the inclusive growth story is what this alliance is all about.
All right. Smriti Irani talking about India's inclusive growth story and the Prime Minister's agenda at Davos. With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV 18.